Ron and I deep dive into the Bluffton numbers this week. We talk about the Fed's plans to reset home values. Bluffton Hilton Head, number 26, the home ownership rate, number 26 in the country this week on Market Monday. Hey Ron, how's it going?
Hey Dan, how are you?
During your Father's Day, did you have a chance to look at the Bluffton numbers?
You know I did. I've been spending a lot of time out in Bluffton. What I'm seeing is while the numbers here say that, inventory is down and on the surface, people would start freaking out about that or sales are down. But if you look at it, we're actually right where we should be. The only reason the sales are down is because inventory is down, but the numbers line up.
Year over year inventory is down 43%. Year over year under contracts are down 43%.
And we're comparing these numbers to 2 years that were historical.
Yeah.
Like we were talking before, it's like taking Trae Young, who's an NBA All-Star this year, and taking his last 2 years and comparing them to Michael Jordan's best 2 years. They're historic. You can't tell me it's a failure because they don't match up to Jordan's last 2 years. These numbers are still unbelievable.
We're going to talk here in a minute about the Fed plans to reset the housing market, raising the likelihood of falling home prices. I just don't see any signs of that occurring. So this last week, we had 21 properties come on the market. The week prior, we had 25, and this week last year, we had 37. The first thing that we would see, the canary in the coal mine, so to speak, would be a massive property coming on the market. The market get flooded with people putting their houses on the market. Why do you think we're not seeing that?
With the amount of turnover that we've had over the last 2 years, there's only so many people that can move out of Bluffton. There's gonna be people that wanna stay there. So I think that's why you're not seeing it. People are comfortable there, but I can tell you that the market is still hot.
When the market crashed in 2008, 2009, there was a lot of inventory that came on the market. What's the difference between now and then?
I think the difference is this time it's real money purchasing these homes. 2008, 2006, 2007, leading into that crash, you had scrupulous loans. People did not have a lot of money invested in it. They were house poor. This time what you're getting is 40% down, 50% down, all cash purchases. These are strong buyers. These are people that have some of their life savings invested in these properties. They're not going to there's no reason for them to walk away. The house is not costing them that much. It's not hurting their everyday life.
COVID is what spurred this. And what COVID was about, in my opinion, is I don't want to be stuck in an apartment in the city somewhere when I could live on Hilton Head Island. Work is now going to let me work remotely and I can do my work and then I can go out and walk on the beach in COVID and be socially distanced and totally safe and have a life. It's a lifestyle choice that has driven the strength in our market. So folks, when you look at these headlines, this is national news, right? We care about what the local news is. I haven't had anybody say to me, let's cash out and move back to the cities right now.
None of that is happening. Referring to COVID too, I think that the reset taught us to fall in love with being home again. And people just aren't living in houses again, they're making homes.
That's right. That leads us to an article from Fortune that said the Fed plans to reset the housing market, raising the likelihood of falling prices. And basically what they're talking about is the Fed is going to adjust interest rates so hard that they're going to force a housing correction. What is a housing correction? To me, it means a reduction in prices, to bring prices down so that more people could afford it. Do you think that's going to happen here?
I don't. And I think that scare tactics is what brings people on. It's clickbait. Yeah. Even with the increase in interest rates, there's more to buying a house than just a mortgage. There's more cost. For example, if you're living I'll use New Jersey because I'm originally from New Jersey, your property taxes on average could be 14, 15, 16,000 and above. Down here, if you're using it as your primary residence and you're on the 4%, you could be looking at 3,000, 4,000. That's a savings of 10,000 a year. So for someone in the Northeast or California who pays high taxes, you know what, maybe the half a point, quarter of a point, it might seem like a big deal on paper, but when you really get down to it and start doing your budget every month, it's still worth it to come down here.
Section 2 of this article says Fed Chair Powell raised the hypothetical of home price drops on Wednesday. Quote, how much will it affect housing prices? Not really sure, right? What if this aggressive increase in interest rates just makes people stay put? How are prices going to correct and reset if people stay put? Isn't that kind of what we're seeing? 21 listings coming on the market all last week in Bluffton when the stock market just basically fell apart.
They're trying to fix everything with one quick solution. Yeah. It may not be. It may be a multifaceted problem that doesn't apply to all areas.
Did you see the article on the Unpacket about, says Hilton Head, Bluffton and Myrtle Beach homeownership well above U.S. average?
It's it's one of those things. It's when you look at it on paper, it comes down to a couple of different factors for me. One, We keep talking about it over and over again. People love it. 2, the lack of rentals available really factor into this. And if you're going to spend $3,400, $3,500 a month on rent for a house, you might as well take the plunge and buy it. It just shows, and more than that, it shows that people want to live here.
All right, Ron, mailbag. You got a couple minutes to answer a couple mailbag questions?
Definitely. Can't wait.
One of these specifically, I really want to get your take on. So Paul asks, why can't realtors give suggestions about schools to clients?
One of the things you have to be careful with as a real estate agent is steering. And that's a violation of the Fair Equity Housing Law. You learn that probably the first day of real estate school by saying this school is good, this school is not good. It brings in all types of problems of, if people get into a neighborhood and they're not happy that you steered them right to that neighborhood. It's just a bad road to go down and an illegal one. You're better off just saying, check online. All the numbers that you need are available and you can look into school systems that way.
The second one, this is the one that I really want your take on. Bernard asks, why is the agent failure rate so damn high? I've been thinking about getting a real estate license for a few months, but 87% failure rate sounds ludicrous to me.
Because it's really hard. I think people fall in love with the end result and they don't fall in love with the process. This is something that you have to enjoy everything. You have to enjoy getting up. You have to grind every day. You have to follow the steps. You have to be humble. Because if you're not humble, this business will humble you in a hurry. I think another reason the failure rate is so high is people don't know what to expect and they don't surround themselves with the right kind of people. And it's kind of one of those things where you have to have structure. And if you're not following someone else who's done it before, you're kind of lost.
We're really reaching a critical time on that advice, right? So somebody that's thinking about getting into this market right now, everything about this market is changing. And if you're going to have success in this market, you need to have a different playbook. So, we're going to have conversations internally with our company this week about what our playbook is going to change to, because the way that we've done business isn't going to work in this new environment. And so why try and reinvent something that somebody else has already invented? And so I think that's great advice. Get yourself aligned with a mentor, a team, whatever it is, rather than trying to figure everything out yourself. Get yourself a head start. And if somebody's thinking about getting into real estate, can they give you a call?
100%.
It's still fresh in the brain, right?
It's still fresh. I'm seasoned enough now that I'm confident speaking about the market, but new enough that I remember what it was like just, 14, 15 months ago.
All right, so we'll leave Ron's contact information below. Thanks for joining us this week, and we'll see you next week with the world famous Blaine Kaiser.